Hello and welcome to a brand new episode of Smart Money. Now, in the recent Vibrant Gujarat Summit, the Finance Minister Nirmala Sitharaman spoke about how India is on the way to become a $5 trillion economy by FY28, and India could reach the $30 trillion mark by 2047. So the question that we're asking today is, from a market perspective, what will it take for India to hit that milestone, and which are the sectors that can lead to that level being hit? Joining us now is Gurmeet Chadha of Complete Circle Consultants to give us his top themes for the year 2024. Gurmeet, always great speaking to you. Thank you so much for joining us. You know, the big question, right? What will it take for India to get to that 10 trillion economy mark?
I think excellent topic of choice, Sonia. I think, see, we are seeing is that every decade and every bull run has a different leader. We saw the traditional companies do very well in the journey to 1 trillion. Then you had the 2003 to 7 phase with all infra. We saw the banks and NBFCs making a big mark in the last decade, the likes of Bajaj Finance and others doing pretty well. Then you again saw IT taking over with, and then post-COVID things are changing. I think the themes broadly, which I think can do well over a period of time, is manufacturing. I think India government has a target of 25% manufacturing to GDP, which basically means that it will grow from currently at about $450 billion to upwards of $2.5 trillion. That's like 5-6x versus let's say 3x on GDP and 3x on market overall. India is doing a tremendous power transition, demand as well as the sources of power. I think that's another sector which is in focus. Thirdly, is a sector which has recently come up with the policy focus being on tourism, a sub part of the religious tourism. I think tourism is a focal point, and that would lead to more upside in services and other related sectors. And obviously finance. I think financialization is something which is a phenomenon we have seen post-COVID. So these are the broadly 4 or 5 pillars. I think one can curate portfolios and really make a big mark.
Okay, so you said manufacturing, you said power, and you said religious tourism, right? These are 3 sectors that you're looking at in a big way. And I agree with you entirely. I mean, at the Vibrant Gujarat Summit itself, we saw so many companies from this manufacturing and power space who spoke about several investments being made in this sector, not just from Gujarat, but from across the country. So let's start with the big theme to watch out for, which is power. Right? Some of these stocks have already rallied quite a bit, but you tell us, what's the way forward and how should investors capitalize on this?
I think we should make 2-3 subsets of this. I think if you look at, for example, we would be adding about 80 gigawatts of thermal power. We'll be reaching up to 500 gigawatts on non-fossil and renewable energy. Now, if you just break it down, it creates the transmission pipeline of 2.5 lakh crores in terms of contracts to be done, in terms of upgrading your transmission lines, which is technically 25-30,000 crores of transmission, just in a year. And power demand, has grown at 8% plus versus GDP growth of 7%. So it's outpacing it. Tells you that, there's a big revival in play. So we probably there's more value probably at transmission level, to the likes of power grid, etc. Imagine the demand for insulators, imagine the demands for transformers, and then you get into generators. I think some of the PSU names also make the cut, like the likes of NTPC, and transmission, something like Power Grid. And, we have discussed so many times Tata Power. It's finally started to, really show what it's truly worth at. So I think this entire sector will see, there is a bit of a valuation thing which has come up because there's been a lot of run-up, and this run-up is actually now across the market. So you got to be a little careful in terms of what you pay. Also make a broader basket so that you don't do any valuation accidents on the way, because you are at 21-22 times on Nifty. Small mid caps have given 50% returns last year. So there could be near-term hiccups there.
Could be near-term hiccups, all right. There's big focus on the renewable energy space as well, right? And we've seen a lot of these stocks that have rallied substantially. Whether you talk about, say, Tata Power is at a fresh 52-week high as we speak. There's so many others in this space, whether it's JSW Energy, Inox Wind, etc. But you tell us, which are the stocks where there is still some valuation as well as growth headroom now?
So I think, as I said, NTPC alone wants to add 60 gigawatts of renewable energy. I think valuations are still early double digit, not really extreme. So if they can demonstrate good dividend yield, if they can demonstrate, ability to execute well, prudent capital allocation that should make the cut. We've discussed L&T earlier. L&T is not technically power; it's more capex and more a subset of that. Then you have the KECs of the world. Tata Power we have discussed. I also think Reliance I think is also due. So if you see, for example, post the Gujarat summit, where I think Reliance hinted at capex cycle nearing to the peak, we saw a bit of a movement in the stock. So once the OTC segment of the stock starts doing well, I think it could be, and there's value unlocking as well, which is left once the company decides to do that over a course of time.
Okay, all right. So that's on the renewable energy space. There's this data center theme that you have been talking about for a very long time now, Gurmeet. Tell us a little more about that. What are the stocks that one can still benefit, and what is the kind of growth opportunity that you're looking at in the data center space?
So the broader theme here is both data centers and digital engineering. I think our data center capacity will go up from 800 levels to 1,700, 1,800 megawatts. There's an indirect play, as I said, in terms of to play this, in terms of playing it through the likes of L&T and others. And then there are hardcore digital engineering companies, which I think is making a transition of India. We saw a recent listing of Tata Tech. I think it's a wonderful company. Obviously, post IPO, the valuations have really got stretched. But I think if you take a slightly longer view of 4 or 5 years, they are developing some great capabilities. You visit their site. I think it's really going to do well. And there are subsets of it, in terms of companies really playing the entire digital network as well. We also like another subset of that, which is not very completely data center, is one company which has done well for us is KPIT, which is more CASE, which is connected autonomous shared electric. So that's another one which we continue to like. I think software as a percentage of car in terms of the component, currently it stands at about 35%. You'll probably see almost getting it to 60% as we get into full EV adoption mode.
So you don't think the KPIT story has played out in its entirety? You think that there could be a lot more? Because it has been a huge wealth creator for investors, especially during the tech boom, right, that we saw in the last couple of years. You still see more value here?
Absolutely. So Tata Engineering, Tata Technology more as complete end-to-end, starting from concept to mechanical engineering to the software part of it. KPIT, especially for CASE, which is connected autonomous shared and electric. See, when the stock runs up 3, 4x, 5x, I think you will see some pullbacks. I think, and the reasons can be plenty. We've seen that in some other pockets all in the market. But that's the time to actually, take a slightly longer view on that. And I said it earlier in the beginning of the show, markets are slightly expensive, and you got to be a little more staggered, have a slightly longer horizon. More importantly, also, taper down the return expectations.
Okay, taper down your return expectations. I think that's always a good thing, right? To have low expectations from market and from life in general. Let's do one thing. Let's take a quick commercial break, but many more themes to talk about on the other side of the break. We spoke about manufacturing, power, data centers. What else should you be looking at in 2024? We'll come back in just a bit.